To ask you, so how do you know when a market is ranging?
How
Like
do you think market is?
when the is it market is ranging, I mean trades are ranging, buying and selling is in range. How do you know?
When the market is ranging, you won't see high, you won't see new resistance or new you won't see price breaking your resistance or breaking any your support.
Okay, just be
You won't see
between.
price breaking any zone. Like if you
Okay,
look at this now, let me quickly analyze this for you. This was because I was supposed to use what we call high and low, but I've not really taught you guys highs and lows, so I'll just follow use resistance or support. So let's say this is the resistance of that time of this time frame, and this is the support here. You can see during Asian session, what happened? Price was just moving in between. It was not really breaking any of the structure. It was not breaking your resistance or breaking your support. It was just moving in between. So this is what they call a ranging market. When price is just moving in between your support and your resistance.
okay,
You understand? There's nothing, there's no much price action occurring. Price is just moving in one place. You understand?
okay.
Just moving in one place. It's not breaking any zone. It's not breaking any zones on your charts. It's just moving between prices. So that's what they call it ranging markets. You get
Yeah, I feel it.
uh so we should be looking at what we call trends. Today we're looking at what we call trend. It's just quite similar. If you really understand support and resistance, trend should just be easy for you. Trend should be easy for you to follow. So for you to be a good trader, for you to have a more profitable trade, it's always good to trade during a trending market. If your market is not trending, that market is ranging or it's consolidating. Let me bring out the notes. So we're looking at trends. If price is not trending, that means market is consolidating, which is also known as the ranging markets. Consolidating means ranging markets. You understand? And the best market to trade, the best price action to trade is a trending market. Is a trending. So your next question will be what are trends? What is trend? What is trend in Forex? Like the name goes, trend. It just means what is happening. You understand? Trends is just like series of events, series of things that have been happening over time, over a period of time. You say like if you use let's use music industry, you say top 10 trending. What's trending on your Apple Music? That means the most played, you are looking at the most played songs, right? In the country for that, let's say for that week, top 10. You start. But for Forex market now, when you say what is trending, looking at okay, who are the people in control of the market more? You start. Are they buyers or more? Are they more buyers or they are more sellers? That's what brings us to trend. Are they more buyers or they are more sellers? How do you know when they are more buyers and how do you know when they are more sellers? Who is in control of the market? And you understand? That's just the explanation of trends. Who is in control of the market for that day or for that week? As a day trader, you're looking more of that day. Who is in control of the market today? Is it more of sellers or there are more buyers? So that brings us to the two types of trends you have. Ah, uptrend or downtrend. Are you guys with me?
Yeah.
So this brings us to the two types of trend we have. We have the uptrend and we have the downtrend. The uptrend just tell us it's just for buys. Uptrend, if they say a market is trending upwards, it just means that market is buying. That means buyers are in control of the market. If they say a market is trending downwards, it just means that market is selling. That sellers are in control of the market. So now, how do you identify an uptrend? Will be your next question. So I'm breaking it down for you guys. How do you identify an uptrend? Will be your next question. So for an uptrend, we use higher highs and higher lows. Higher low. So for identifying a trend, we use highs and lows. Before we are using support and resistance, but for trends, we'll be using highs and lows. You understand? For previously, we've been using, you guys are used to support and resistance. But for trends, we'll be using what we call highs and lows. So now, for an uptrend, we'll make use of what we call higher highs and higher lows. Now you ask you, what is your high and low? You ask me, what is your highs and lows? So this is just a simple thing, my own simple interpretation for you. Your high is the same thing as your resistance. Your low is the same thing as your support. That's just the simplest way to know your high and your low. Your high is the same thing as your resistance. Your low is the same thing as your support. But the difference between support and resistance with highs and lows is your resistance, you have to see your resistance is made up of two highs. Yes, now two highs rejecting on the same level, on the same price level. While your support is made up of two lows rejecting on the same price level. At least two lows rejecting on the same price level. So if you don't see two lows rejecting on the same price level, you just take that place as a low. You won't say it's really a support. You say that is a low. So just interpret it. That is why I say just interpret highs and lows the same way you interpret support and resistance. Your highs is the same thing as your resistance. Your lows is quite similar to it's the same thing as your support. It's the same interpretation. Now, for a trending market, for an uptrend, for an uptrend, for you to say this market is an uptrend, price has to be breaking your highs. For you to say it's an uptrend, price has to be breaking your highs. Yeah, let me give you an example. Let me use this pair now. Today is Monday. Let me see if I can get a trading markets. Are you guys following? If you are not confused.
No. I'm following. Oh, good.
Let's go to live charts. So now, if you're analyzing these charts now, okay, let's analyze this chart afresh. Let's look at this chart afresh. You say this is your resistance, this is your support, right? Then you have another support here. But if you look at this place now, you see price, you see some minor rejections. Look at, let's go. Look here, you see price moves rejected from here, come down.
Yeah.
This place now that I rejected now, you won't really say it's a resistance, but here will be called your high. There you guys, this is your high, this is your low.
Yeah.
So that highest point price it got to before it rejected, this is your high, then this is your low. Price moved again, broke through the high, give you what we call this for an uptrend, give you what we call a higher high.
Yeah.
Now the retest now, you understand? The retest now of that higher high, understand? The retest, the support it will now create after it gives you that higher high. The support will now create will now be called your higher low. Again, price broke again, broke through your higher high. Give you what they call out again, another higher high. Created higher low, gave you higher high. Now, do you know why this market is moving like this in this range? Do you know why price
Uptrend.
are not giving you ahead? Do you know why?
Uptrend.
Eh?
Uptrend.
No, apart from uptrend, look at it again. Do you know why this market is moving this way? Let me show you. Let me highlight it so you can see what I'm doing. Look at what price is doing currently. Look at here. The market is not giving you a new currently on this 15 minutes time frame as of now. Price is not giving you a new high or a new low. It's just moving sideways. It's just moving in a range. It's just consolidating. Do you know why? Look at the currency pair. Here's the card.
Yeah.
Because we are trading out of session.
Okay.
This is currently, we are still in London session. New York session has not started. You get, and both USD and CAD are both New York session pairs.
Okay.
Am I making sense?
Yeah. Yeah.
Both USD now and CAD are both New York session pairs. Yes, yeah, I believe if you are in US or Canada, you know that this is very valid. By now, your banks in the US, I'm not sure they are operating by now, or Canada. It's quite early. I mean, it should be around 6 or so.
The 6, yeah.
Start. So New York session has not opened yet. To open in a few hours time, in like 1 hour or 2 hours time. Are you guys following?
Yeah. Yeah.
Start. So back to our uptrend matter. So that's why we are currently seeing this kind of price movements, these short candles, this particular range. Start. So now, this is an example of an uptrend. Yes, now for you to say that market is an uptrend, that price has to be breaking your highs. So if price breaks your highs, it's giving you what we call higher high.
Yeah.
Yes, sir. The retest now, the support in that, because first is, before I said on support and resistance, I said the price breaks your resistance, you know that market is a bullish market. So now we've simplified it for you. We're giving you highs and lows. You understand? We're giving you highs and lows. We've simplified it for you. So now you can just see this is an uptrend. Uptrend is the same thing as a bullish market. Serious is CHF. This is your resistance. This is the support. This currency pair has not really moved much. Has not really given much price movement. This was just only Friday. But if you look at it, it has broken through your resistance. You look at it. So definitely you're looking at it for more buys. Understand? So now let me use this place for you, this section, to explain an uptrend. See here. Your high, your low, higher low. What happened? Higher high. So you're always meant to buy for an uptrend. You're meant to take your buys from your higher low. You understand? Your higher low is the same thing as your support. But you have to confirm that, okay, this is an uptrend before you can now say, okay, for it to buy. Are you guys confused on this uptrend situation?
So my
No,
question,
I'm good.
my
I'm good.
question now is, if you've identified your highs, right?
Yeah.
Your high, you now see is it a higher low? Be lower high.
The
You see
higher,
higher
don't confuse lower high from higher low. Lower high is for downtrend. Higher,
downtrend.
higher low
Higher,
uptrend.
yeah, and then you see your first higher low.
Yeah.
What's it like? How do you? There's no way to predict if it will start ranging from that point, Abby. Like instead of going towards like an uptrend, it just bounces up and down.
And start ranging.
Yes, and it starts ranging.
Something like this, right? So now let's see if you are, let's see price. This is why they said wait for at least 2 highs to fall before you take it back. So let's say this is your first trend.
Yeah.
Your first high, your first low.
Yeah.
You have to wait for price to break this previous high.
Okay.
Before you can now say, okay, I want to buy. So at this point, now once it breaks this previous high, you already say you want to buy. But there's a problem. You know, I say don't buy from your resistance. So definitely you're not looking to buy from your high. You get what I'm saying?
Yeah.
This is the next problem. Though some people actually, I won't say because that is my own way of trading. Yeah, most people actually trade what we call breakouts. So what I mean by breakout, they just wait for price to break their resistance or their support. They take their entry.
That's what I do sometimes, but it doesn't
So,
know.
but why I don't like it, you understand, and why I never trade it. In fact, I've never done that I don't think in the past 1 year or the past 2 years I've been trading now. And maybe I did it in my first year, but I don't think in the past 2 years I've been trading. I've tried it. I've tried trading breakouts. I don't trade breakouts because you know why? There's what we call fake outs. The same way that there's breakout, there's what we call fake outs. Market can just so there's another terminology for fake out. It's called liquidity grab, liquidity sweep. This guy that is doing SMC, Fisayo, you know what I'm talking about. This is what we call liquidity sweep. It's the same thing as a fake out. Fake out is for price action. Liquidity sweep for SMC traders and ICT traders. So this is what we call fake out. Price can just let me see if I can give you an example of a fake out. Yeah, this is an example of a fake out. This is an example of a fake out. Let's say I zoomed in now. So let's say the price was This was there before. If you look at this trend previously, if you look at this structure, you see that this kind of a sell market, right? So now, let's say you're like, oh, price is not giving you, price is not giving you a new low. Yes, price is not giving you a new low. I saw this, I'd be like, oh, price has broken through your resistance. You saw the spike, and you wanted to trade the breakout, and it took the buy. Look at now, price has faked you out and continue the sell. Because look at here was like, yeah, if you look at this point, here was a resistance, here was a high.
Yeah.
Yes, that here was a high and price broke through it. So if you are a type that usually trade breakouts, you must have tried to catch this buy, not knowing that it's actually a fake out and you'd have been in hot soup. Are you feeling me?
Yeah.
So that is the problem I have with trading breakouts. Yes, that.
So, it hasn't been this weekend, it hasn't worked for me. So I've realized like I can't keep doing that.
Yeah, so that is the problem I have with fake outs. That is with breakout, with trading breakout. So it's not like people don't trade it, they trade it, but for me, that's why I don't even teach it. I don't even talk about it at all. Because I don't want you to have an idea about it. Understand? So for me, what I do is once I see my first high, I just observe. Yeah, there's what they call waiting period. You understand? It's not every time. Like in trade, in forex markets, in a month. Let me just give you this tip. In a month, it might be you can see if you have a strategy that works. If you have a good strategy, if you have a trading strategy and a trading plan, you might see 3 or 4 trades in that month that will go perfectly well with your trading plan. But you see the rest trades that you'll be taking, they might not just fall in line with your trading plan, with your trading strategy. Might just fall in line completely with your trading strategy. One or two things might be missing. You understand? But we as a traders now, because of our emotion and psychology, because of our emotion, we want to trade, we want to make money. Because it's like you have, because trading is a job. If you don't know, trading is a full-time job. You understand? For me, trading is a job. If you want to trade trading as a career, trading is a full-time job. Trading is not something that you say you just want to do it. You just want to put your eye. They don't just put eye in trading. To take everything it will take everything you have, it will take your mind, it will take your money, to take your attention. It's like woman, it's like Nigerian babes. They want everything. Trading will take everything. You understand? To take your attention. So it's a full-time job. You feel me? Trade is full-time job. So it's like you now say, I have a full-time job, but in a month, I only want to work 4 times. You know, if it's a job you love, it's an addiction. You won't control yourself to stick to that 4 times. You understand? So sometimes you might not see trades that go perfectly well with your trading strategy, 100% perfectly well, or even 80. You won't see. You might just see something that goes like that can give you, because in trading, yeah, you must have confluences before you take a trade. So those confluences is what brings out your trading strategy. You understand? Those confluences is what bring out your trading strategy. So now I'll list my own confluences for you. These are my confluences for trading. These are my trading confluences, which I'll be teaching you fully for this class. These are my own trading confluences. As the same thing as my strategy, trading strategy. So I'll list them out. First, I look at trends. Yes, that I look at the trend of the market. Then second, there's what I look at, fifth zone. Fifth zone. Then my entry signal. My entry signal
seven been at to eight. Oh, we can chat me man don't take.
Sorry, my entry signal is usually what I call my entry signal. Sometimes I use pattern, I use price pattern.
No, man.
Or
Just guys of it, but no, internal.
other blocks or weak rejections. Weak rejections. So now, these are my own confluences if I take a trade. You only know about trend. I've only taught you this. You still have this, which I've not taught you this time. So these are my confluences if I enter a trade. So these are my entry signal. Like the thing that once I see it, I know I'm pressing that buy or I'm pressing that sell. You understand? So now these confluences now in a month, you might see 3 trades that might align perfectly well with most of these confluences, with at least 4. How many do I have? I have 1, 2, 3, 4, 5. So I might see in a month, I might see 4 trades. I might go with at least 4 of these confluence because you can't see you won't see a trade that will go 100% with these things. You understand? So I might see a trade that will go like with at least 4 or at least 3 of these. You understand? 3 is okay. I just look at mainly I look out for at least 3. Let me see these first 2 importance. Yes, then either I see this or I see this or I see this. Mostly I look out for this and this because it's not every time you see this. This is not every time, but when this comes, this is like a sure signal. But when this comes, this is like a sure signal for me to enter that trade. You understand? But mostly I see this, I see any of these 2. So in a month now, if I will see a trade that will give me this, might be 2 times or 3 times. Understand? But most times I see this. So because you might not be able to see a trade that will give you all of your confluences, you might decide to just see in case now other times you see only these 2. You might enter the trade. You understand? You might enter the trade. You might not want to wait for everything to align because we are human beings, the emotion. You want to trade, you want to make money. Trading is like them putting you in a full house of gold and telling you there's gold there, but there's also snake, poisonous snake.
As you find it, Sean.
You understand? That is how trading is. It's full house, so there's full gold, but there are poisonous snakes there too. That is just what trading is. So now it's now up to you to be careful so that those snakes will not bite you and poison you. Start. So now the only thing that cannot save you in trading now is now what we call risk management. So when those snakes bite you, you will still be protected. Yes, you'll still be able to live long in the markets. So that's just how trading is. So we as human beings, naturally, we are greedy. We want to just pack as much as we want. You don't have break. We're always looking to make money. Yes, sir. So now you see you wait for price again to break through your high, give you what we call higher high. Yes, sir. Most people now don't wait for this. Most times, you don't wait for price to at least break through their higher high and give them a new higher high. Break through their high and give them a higher high. You don't wait for this. As long once price breaks through their high, you just see their buy. This is a buy. But you wait for this price to give you a higher high. Not only give you a higher high, come down to retest and give you a higher low. So now you will not be buying from this higher low. The idea is for you to buy from this higher low to the new higher high. This is how you make more money. And you have peace because you will not be able to put your stop loss below the support. Yes, below the higher low it gave you. But now, if you this is why I don't like buying from a high or a resistance. If you buy from a resistance or a high, where will you put your support? Where will you put your stop loss? Your stop loss should always be below a low. If you are buying, your stop loss should mostly always be, not mostly, always be below a low, below a support. You get, because once price breaks through
low or below a support.
Below
a low or below a support.
Yeah, below a low or below a support. That's where your stop loss should always be. You get. So because once price breaks through that low or breaks through that support, you know that okay, this market is changing direction. Now it's no longer your fault. Because you know that, okay, market just decided to change direction and you were caught in that movement. That is the only reason why most people take stop loss, apart from breaking their rules. This is general reason because Forex trading, you are not in control of the market. It's a market of probabilities. The people that control the market are banks. And I don't think any of us works in those type of banks, top banks, to get insider information. Yes, to get trade secrets. And besides, they arrest people for those things. I think you can serve up to 7 years or so if you have insider information or trade secrets. So since prices, so that's the only reason why people just take stop loss most times, you understand, because price is changing direction, you understand, price is changing direction, or because you break your rule, one of your rules in trading. Yeah. The other is normal. Breaking the two is normal. Don't beat yourself over it. You can beat yourself over it for that day, but as soon as you sleep, make sure that as soon as you sleep, as you are waking up, you've forgotten about it, that never happened. You've learned. Instead, learn from it and move on.
Yeah.
You understand? That's why I told you guys, for now, don't fund big. $50 is okay. Build your confluences with that $50. Build your trading confidence with that $50. With that $100. You understand? So that anytime you take a loss, you won't be bothered. You can sleep well. You wake up. You'll be ginger to learn from that loss. You'll be ginger that, okay, let me learn why. Why did I lose? You want to learn from why you lost. You understand? And when you learn, next time you correct yourself. Last week, one of my students just came to me. My last set, I thought, like, boss, I'm always hitting stop loss and trade will go my way. What is the problem? I knew when you say that, I knew there was a problem. He was doing something wrong. There are two things involved in that kind of thing. Either his entry was wrong, his entry is always wrong, or his stop loss is wrong. And it was one of those two. His stop loss was always wrong. If he's buying, if he's buying from me, he's not putting his stop loss below the low or the support. It's not always so price because market moves very funny. That's why I always say put your stop loss below a low or below a support. You understand? Put it below 10 pips, at least 10 pips below the low or below the support. Because price is always very funny. You understand? Market always comes for people's stop loss. It's natural. It comes for people's stop loss. You understand? So you always put the stop loss either exactly at the low or inside, not below the support, or maybe inside. You understand? Inside inside the support, inside the trade. It doesn't put his stop loss below. So what price will just do is market will just come. Let's say, because candlesticks are very funny. You see those weak, let me show you what they call weak in case you guys don't know what we call weak. You see these things like this. Okay, let me use for example now. Let me use for example.
That top of the candle.
Yeah, let me use this trade for example, so you see what I'm saying perfectly now. This is a good trade to use. Let's say you are trying to sell this trade. I'll use the short position too. You entered from this resistance.
Yeah.
Yeah. You entered from here. So naturally, your stop loss should be very far, like 10 pips or more than, it should be even 15 or 20 above your resistance. You get, it should just be like this. It should be like this. For now, you can use 20.
That is when you are selling, right?
Yes, when you are selling. Yes, and this night for sales. I'll give you an example for sale now. So now, let's say you took the sale. But him now, instead of putting the stop loss above the resistance, you understand? His stop loss is usually maybe on the resistance or inside the trade like this. So this is what market will do. Market will just come. Just look at this spike now. Because look, something that was selling peacefully, in fact, it should have been almost close to TP. You understand? Let's say yeah. Something that was selling perfectly well. Look at what happened. Price just spiked. It has took him out. It took him out.
Fuck.
And what happened? It's nasty sale. Do you know this is the worst thing that can happen to you in trading? Just this thing.
See, bro, what you just described happened to me this weekend. I was using my demo, right, to try and trade on BTC USD. The number of times that it took me, I was didn't make any sense. I tried adjusting my stop loss to I think about 15 or so. It still kept taking me out. And sometimes it will happen in seconds. And after it takes me out, it reverses. It will just revert. And
it happens a lot. It's called a fake out. You understand? That is why before I take trade, you see what I wrote down there? I wrote weak rejection. Look at my confidence. If you look at this,
I lost massively in that good.
You went and trade gold.
Massive loss.
Why?
I entered with demo.
Wow.
Massive loss.
What did you trade? Sell or buy?
Buy.
Why did you buy? That gold was the sale market now. I think we were looking at last.
I will tell you both of them. Nothing.
In the first place, I bought yes. In the first bought I again, then I tried it again before the sale. I lost like massive loss.
Yes,
10,000 something down to 7,000 something. Jesus.
Friday was NFP now. I'm sure you must have taken it to NFP. Friday was NFP. It's on Friday, right?
Is it Friday? I think Saturday or Sunday.
It should be on Friday. Gold does not trade on Friday on weekends. It's only crypto that trades weekends. It should be
Friday.
Yes, it's crypto. It's crypto. Yes. Yes, it's crypto, not gold.
Because if it's gold was a sale market.
No, it's not good. It's not good. It's crypto. Yes.
Because if it's gold was a sale market. And we talked about gold last on Friday too. I think I looked at it, you guys. I'm not sure about that thing. Maybe I thought I looked at you guys. So see, those kind of things happen. That's why you see my confidence, and which I'm going to teach you guys very well. I need you guys to know this. That's why I put weak rejection. Yes, sir. But sometimes it's not every time I'll see it. But also, if I do not see it and I take my trade, I'll add this into my stop loss. That is the only time you see me use a white stop loss. But once I see rejection, weak rejection, I'm not using a white stop loss. I'm using 10 pips. You understand? Because I know price, that weak rejection is just market manipulation coming to take out people's stop loss. You understand? Which are found out So I've added it to my confluence from my trading and practicing and studying. I've added it to my confluence. So I must see it. But if I don't see it, I must give room for it in my stop loss. You understand? So these are the things that make up your trading strategy, that makes you a profitable trader. You understand? These are the things these things comes from studying. You understand? These things comes from you studying and backtesting and studying and building your confidence. You start taking notes of these things, adding it to your confidence. So if you don't see any of these things, you don't take a trade. So now we are still looking at trend, right? So now, let's give you another example. So now let's analyze this trend. This was previous high, low. What happened? Market moves, broke that high, came back, gave you a low. What again? Came back again, gave you a low. I think this would have been Asian session. That range went up, did this range, gave you a new what? Higher high, higher low. Yes, that. Going again, higher high. So this is how you just identify your uptrend. You are just looking for higher highs, higher low. So once you see at least two highs, you know that, okay, price has given you a higher high. Once you see two highs, you understand? You know price has given you a higher high. So you wait for price to give you a higher low before you start looking out for buys. You start ticking up your buys. Can you see? So now, remember gold, I told you. So now look at gold now. Price broke through your supports. I mean, this gold was another trade I saw this morning. I gave it to my other team. I didn't give it to you guys because I don't like calling gold for beginners. I gave them this gold. So I wanted to give you guys GBPUSD, but GBPUSD was not ready there. Yeah. Now this gold is buying. So do you know why I looked out for this gold buy? As a sniper entry. Look at price high. First high. Came back again.
Wow.
And gave you a high. Broke through that high. Now look at what happened. Price came back inside again. Now it broke this low, but it failed to give you a new low, break this support, this main support here, this low here. Giving you what we call equal low. Equal low is a price pattern called double bottom and beginning to touch other aspects of trading. Price pattern, if you look at, I talked about price pattern on this. Why is it not showing my notes part? Look here, price pattern is another confluence, which I'm going to teach you. This is equal low, double bottom. We call it double bottom. What is double bottom? Two lows on the same support level. You understand? Double bottom is two lows on the same support level. It's an entry signal for a buy. Are we together?
Yeah.
Yeah.
I'm not giving you confidence now. People are going too far. Let's stick to our trends. So, so now look here again. Let's look at the sell trend. So,
That's a very sharp drop.
This is for sales. So on a sell, for sell trade, price has to give what we call lower low and lower high. Now, what is lower low? When price breaks through your low, you say price has given you what? a lower low. Now let's quickly mark this first. Let's quickly give it a support and a resistance. So let's say you have it. This is like a support here. This is like a major support here. This is a major support here. Then there was also a resistance here. There's also a resistance here. So once price breaks to that support, you are beginning to look out for what we call sales. Broken through your support. First low has been created. Now the retest of that low, you understand, like broke through, will be called lower high. The retest now, that resistance is going to give you that minor resistance. You understand? It's called a lower high. If it breaks through that low, we give it lower low. Retest again, give you a minor resistance, lower high. Breaks through again, lower low. Minor resistance, lower high. Breaks through again, lower low. Minor resistance, lower high. Breaks through again, lower low.
Well, after a while, it looks like it started ranging.
Yes, ranging. This must have come during either Asian session or the market was waiting for this range. Price was waiting for NFP. So there's something that usually happens before, like that's why I said I won't be trading tomorrow, because tomorrow the market will be ranging. It's waiting for CPI and Fed interest rates. You understand? The day before news happens, or the session before news happens, price usually just ranges and consolidates. Why? Because it's just like it's waiting for everybody. Every trader is waiting for the news results to come out. You understand? Before they can take action. Are we together, guys?
Yes, true.
Yeah.
Any question, guys? Currently, we've really talked today.
It's not really a question, Sha. I just wanted to know if the market like that coming down like this now, this your screen is
Yeah,
coming down coming down like this now.
yeah, impulse move.
This is a downtrend, right?
If market gives you an impulse move, you are not meant to do anything. It's like trying to catch a moving train.
Okay.
This market is just giving you, because one thing you have to know is price does not just move on a straight line. Price does not just move on a straight line. Yes, that. And this move now was caused by NFP. This sudden drop, this straight line movement.
But this is the down. This market now is down. This your line now. Like is downtrend now. Like this is a
Yes.
All the way.
This is a selling market. The market just sold. You understand? This is a downtrend, obviously. But if I take it to the higher time frame, that sell has hit. That is why I like to analyze from the higher time frame, then just look at the lower time frame for entries. If you look at it now, that sell has hit a major support level. That's why we're seeing these buys. So I don't know if you follow this, if you follow all I've been saying so far, you should be able to begin to get your trades. You understand? Mostly, I usually just take trades from higher time frame support and resistance levels. But it's not just that. You understand? It's not just really that. There are some things I look out for. There are some things I look out for before taking. But altogether, those things generally just brings us to your higher time frame resistance and support. That is where you get good trades. That's where you get good trades. So once price is approaching your higher time frame, major supports or major resistance, just go to your lower time frame to figure out your entries. So look at this.
Sorry, this higher time frame that you're talking about, is it like you make the time frame 4 hours above or?
Yeah, 4 hours. 4 hours. Specifically 4 hours, but 1 hour too is also cool. 1 hour.
1 hour is a higher time frame, right?
Yes, 1 hour is a higher time frame.
But okay, what about the lower time frame is 15 or those 15 minutes, 5 minutes,
5
right?
minutes. Yeah, 15 minutes, 5 minutes at lower time frame. It's that 15 minutes, 5 minutes, lower time frame. I just use them for entries. You use them to pick your entries.
And this higher time frame, you use them to
Analyze,
to
know the
analyze.
market. So yeah, to know where you're, to know the area you're going to take your trades from. Then once price is approaching your point of interest, your zone, you understand? The zone you're looking out to enter your trade from. You go to your lower time frame to pick your entries. You know why you can't use your higher time frame to enter? Because if you use your higher time frame to try to enter a trade, your stop loss and your stop loss will be wide. And you're not a swing trader, a scalper or a day trader. You understand? Higher time frame will be giving you a wider stop loss.
Okay.
Just means that your balance will need to be higher.
Yeah, and that means you're looking to swing trade. You're looking to hold that trade for probably days before you can get a good risk to reward.
Okay.
Yeah.
That means,
Yeah.
okay, I understand.
So that's why I just look. I just use the
So
higher.
if you are using an higher time frame, you are expecting the market to be long, like a long market now, you know.
You're expecting it to if you're using a higher time frame to analyze here, you are seeing the big picture, you're seeing the general structure of the market.
No, I mean take entries. Like if you are using an higher time
Okay,
frame to take
better.
entries.
If you're using a higher time frame to take your trade, that means you're probably looking at the trade to play out. Because see, for 4 hours basically means you have to wait for 4 hours for that particular candle. Like this is a 4 hour time frame. Before this candle will finish, we close. 4 hours has to count down. 4 hours has to count.
Okay.
You understand? 4 hours has to count before another candlestick.
But if the time frame is in 15 minutes now, you 15 minutes have to count before another one will form, right?
Yeah, before another candlestick will form, yeah. You understand? So 4 hours is quite a long period of time. So you have to now wait. You have to be patient. Your stop loss will always be wide. Your stop loss will be wide. But 15 minutes in and out, at least you are seeing what is happening now. I'm not waiting for the next 4 hours before you know what. But 15 minutes, market is telling you what is happening and seeing the current price action. 5 minutes, you're looking at what is happening now. Is the market buying now? But if you look at this candle now, 4 hours, this is a 4 hours candle. Inside these 4 hours, buys and sell are still happening. If I change this time frame now to 15 minutes, you see buys and sales inside the 4 hours. It takes about 8 15 minutes candle to give you 4 hours. Is it 8? No, more than 8, save. I think 32. So look at that same 4 hours candle that is giving you blue. You also have sell candle. You have buy candle. So buys and sales are happening inside that 4 hours, which you don't know of until you go to the lower time frame to see it. Yes, sir. So the lower time frame just tells you what is happening now.
Okay, sorry. That's this your lower time frame now. This lower time frame now, you see other candles forming, buying and selling.
You see the current price action on the market. If buys,
Yeah,
if market is
buy
buying,
and
you see
sell.
it. If market is selling, you see it.
You see,
Yes,
other candles will be fun, but if it's in 4 hour time frame, that 4 hour time frame now, just one candle.
yeah, if it's
Abi?
power time frame now, if the market is if the candle is the buy candle, you understand?
No.
That market will be buying strongly. That means there is much buyers than sellers. So that is why the candle is buy candle. If that candle is a sell candle, that means there's much sellers than buyers. So now look at this candle, look at all these candles now. You see that most of it is formed with buy candles, right? Most of these candles they are buy candles. So that is why if you go to the 4 hours, you see that this 4 hour candle, the buy candle. Can you see?
Bros, there. Bros,
Yeah,
not like this.
I'm waiting. I'm with you.
Aye.
Are you talking to me?
I actually have a question. My own question is sometimes even when you're waiting for buying or selling to finish within a time frame, it can change because it can show a buying trend. And I saw it happen this weekend so many times. It can show that, oh, market is in buys now and is going back up. And all of a sudden, reverse. And instead of it being a buy, it will start reversing to a sell and it will drop.
Sorry, go again, please.
Let me see if I can. Okay. Hold on. So a candlestick like this now shows you the buys and selling happening within this time frame. Right? So there's about 1 hour, 31 minutes left.
Yeah.
Yes. So if you go to a lower time frame now, you know that, okay, if you do maybe 30 seconds or you do 1 minute or 5 minutes or 10 minutes, right? You know that time frame is basically just counting for the 15 minutes. So what happened in the market is 15 minutes.
Yes.
Yeah. So on Saturday, when I was trying to use my demo to trade on, right?
Yeah.
So it happened where I can see it forming like this.
Yeah.
It is in buy. And I buy at the point where I'm like, okay, I'm comfortable. It has broken past resistance. It is definitely go to move in the right direction and everything is looking great. Just before I hit take profits, it will reverse and start going down. Like
Yes,
this.
nah. That is because the lower time frame now.
Shit.
Yeah, sir. That's what I'm telling you. Like, that's why I said I need the higher time frame. Get this now. Okay, that's now what you're saying. So now, as I said, I use the higher time frame to analyze. So I'm entering the analysis based on what the higher time frame is telling me. Good. So now I go to the lower time frame to look at what is happening now. So if buys is happening now, if I'm seeing higher highs, or if I'm seeing higher highs, I know that okay, it's aligning with the higher time frame, right? So I enter my buy.
Yeah.
So now I have a TP. I put a TP, I set the stop loss. I have a TP in my head, I set stop loss.
Yeah.
Price is doing great. Breaks giving you higher. But one thing you should note about higher time frame structures are not solid. They are not that solid. It's price can change structures on higher time frame easily. You understand? Because it's 15 minutes. Price can change structure easily. Before price, let me tell you something. Before price will change structure on your 4 hours, it must have already happened on your 15 minutes and your 1 hour before you even see it on your 4 hours. You understand? It must have happened 15 minutes or or 1 hour before you sit on your 4 hours. Yeah. So now if you set a take profits on your 15 minutes and you see price reversing, you don't need to wait for price to get your take because it's 15-minute structure. Yeah, because why you're using a 15 minutes because you are what? A scalper or a day trader.
Yeah.
Looking to hold the trade for long.
Yeah.
Yes, sir. There might be a lot of reasons why that price is reversing. Either it has hit a higher time frame resistance, or it has hit another time frame resistance, or it has just hit a structure on another time frame that you are not seeing.
Mm.
Dati lang yung tanga, hindi ko na siya kasamahin. Sabi niya, lahat ng
You
pera
just have to take your profits and go.
So
It's a
it's
higher time.
exactly what happened.
Hindi siya kailangan
The
niya.
losses that were happening, they were not like they're not large, but once it starts reversing, and I noticed that it is now maybe in a selling trend when I bought, right, and price is going down. I'm just like, okay, I will wait for it to reverse a. So it will be like, because my balance as of Friday was around 87, and I did like maybe 6 or so trades, right? I should have stopped at 2, but I just wanted to keep trying because like I know it's a demo. Let me practice and see, right? As of today, it is down to maybe 83 or 84. So within those trades, it was just taking it incrementally and it was just reversing. It didn't make any sense to me, but I think I understand a bit better now, right? Just knowing how to analyze on a higher time frame, creating structures.
So me now, if I analyze on the higher time frame and I take that trade, I'm mostly looking at higher time frame structure if I take any action.
Won't you need like a bigger balance?
Yeah.
Like, so for
I
people
don't
who
need
are
a bigger balance. Funny thing is, I can even trade the higher time frame structure with $10. All I just need to do is once it's close to, let's say, like I said, support and resistance, let's just use pure support and resistance. Like this is a higher time frame support. Yeah. Once it's at that my higher time frame support, I'm just going to lower time frame to see if buyers have stepped in. For instance, like this is it. You can see what happened here now. Immediately it got to this because this is a higher time frame support. This place that I marked. You understand? So you can see as soon as price got there, it started bringing out green candles. So I'm just looking at buyers to come out. So once I start seeing buyers taking control on that once I see reversal, let me just say reversal. Once I see reversal happening on lower time frame, because you will see a lower time frame will reverse before it will show on the higher time frame. You understand? That is why you don't use higher time frame to take a trade, because before the thing will show on higher time frame, that trade must have even played out before you even see it. You understand? So I'm just going to my lower time frame to look for reversals to see, okay, is this trade playing out on my lower time frame? If I'm looking out for buy on a higher time frame, I'm coming to my lower time frame to see if I'm seeing a buys, if buys is happening on my lower time frame. You understand? So once I see buys happening on my lower time frame, I just take my entry, put my stop loss below the lower time frame zone. You understand? Below the lower time frame zone, put my stop loss below, and just watch it play out. You understand? Sometimes it will be selling on lower time frame does not mean, yeah, as long as price has start giving you a higher high, like this trade now. This trade will sell. This trade will begin to sell soon. To sell. Because why? Because it has given you a higher high. You are meant to see a higher low next.
Yeah.
You understand? So you should be expecting a sell anytime soon. Anyways, so assessing a sell. So it does not mean, but as long as my stop loss is below here, I'm not scared. But if I've made enough money, I can close at this point. If I've made enough money that I'm okay with, if I've made enough good to risk reward, I'm okay. I can close. I don't need to hold it for long. You understand? But as long as my stop loss is below here, I'm not scared. I'll just let it run. I know it's just doing its thing. Because at the end of the day, market is always going to follow your higher time frame structure than your lower time frame. Market will always obey your higher time frame That's just one thing you have to keep in mind. Market will always obey. If market is on your higher time frame support, that market will buy. Don't care if the trend previously was a sell trend. As long as it gets to a strong support, whereby you see that buys have happened on these supports and it's on a higher time frames, on 4 hours, it's on daily, that support, market will be its first to buy. That is just because the higher time frame structure price must obey it. What it means is that support you are looking at, that is where you have people with serious, okay, let's say your lower time frame now, lower time frame support, buyers there are buyers that are putting 100 million, 500 million. Or your higher time frame support, 4 hours, the buyers there are buying with 1 billion, 500 billion. They are not the same people.
Oh, God.
You understand? They are not the same people now.
You know.
Me with 500 billion and you with 500 million. Who will respect? If we go to the same car dealership, they will respect me before they respect you.
I mean, you'll be able to move the market or influence the market
Yes,
more.
now we're able to influence the market. If this car now, if your iPhone is sold for 1 million naira, now people with 1 million naira are like 5. But now another set of people comes with 10 million or 5 million. Let's say 5 million. They want to buy that same iPhone for 5 million. The market value of that iPhone will jump to 5 million.
Yes, no.
So that's why I want people to understand about trading. If you look at trading as your day-to-day, like just compare, just look at Forex market, because it's a market. It's that why they call it Forex market. It's market. It's just buying and selling that is going on. You understand? But it's just it's on another level, a whole different level of buying and selling. You understand? And you are dealing with people that control the world. You're not just dealing with ordinary people. The people you are transacting with on a daily basis are people that control this world. So that is why it's difficult to survive in it. You understand? So the people that are influencing the market are people that you can't even control, you can't sit there, you can't talk to them. You understand? So that is the only difference with this market and our day-to-day markets. So those people influence prices. So that's why I say the market is probability, because people that are controlling it, you don't know them, you can't control them. If they say they want to sell this market now, they will sell it. Nothing you can do. You just be their stop loss. They'll just come and take your stop loss. Your stop loss will be their profits. You understand? If it's just like, say, if Saudi Arabia now, let me give you another example. This is a good example. If Saudi Arabia now say they want to stop selling oil, or they want to crash the oil price, nothing you can do. They are the ones that are controlling oil, the Middle East. Those people are the ones controlling oil. There's nothing you can do. The oil price will crash. That is the reason why the United States is fighting Middle East very well. They don't have control over oil. Those are the people that have control over oil. And that is the thing the US does not have. Oil is the thing US don't have. That is why you see that always pain. They're always involved in the Middle East crisis. And that's what the Middle East have. Yes, that. So these are just examples of things that are going on in the Forex market. If you look at the oil market, I think it's going to crash soon, to sell this week, because there's a news that came up. I don't know what Saudi Arabia is saying. I've not read it, but I saw something about it this week. So I'm just giving you an example. That's just the way this time frame works. I just give you an idea. So now we are looking at a higher time frame resistance. Price is approaching it. That's why we are beginning to see small sales. But once price gets here, you see sell, a retracement. But that does not mean that the market is going to sell. The market was just a retracement on the higher time frame. When you want to know that the market is going to sell is when price breaks below the support, closes below it. You know that okay, price is going to sell. Also on the 4 hours, if you look at it on the 4 hours, this buy is actually a retracement for these sales. If you still look at it on the 4 hours. And the retracement is this buy is happening because it has hit a 4-hour support and it must buy. So the buy now will now eventually be a retracement. So now, what I used to know when retracement will end is FIB. FIB is the tool I used to know when a retracement is going to like end. Like now, if I want to know when to buy, it's going to stop. I'm going to use my Fibonacci retracement tool. So this is why I make use of it. So now this buy will probably see the end of this buy around here. I've not taught you guys on, but once we get there, I'll teach you guys. So these are confluences I just use before I used to take trades. Any question on trend? We'll look at it more tomorrow. Then please, tomorrow you guys need to look at candlestick Bible. You understand? So I'll share that tomorrow. Candlestick. Yeah?
Okay.
How you guys doing? So any question?
No, I'm good.
Any question on trends?
No.
So you guys can identify an uptrend and a downtrend.
Yeah.
How shall we? So we've come to the end of today's class. I hope you guys learned something. I'll share the recording on the YouTube as you later today. Any question? No question, right? Let me see it on the class. So let me ask if you guys are cool. Mr. Wolf, Mr. Samuel, Mr. Ida, are we all good? Mr. Ina?
Yeah.
But just in case you say you feel like sharing what I forgot what they call this thing. If you feel like sharing trades with us, please don't be shy.
Okay, sure. I'll share the trades I'm looking at. I've not even sent. I'll send you guys a screenshot, but you guys might not really understand. I'll send you a screenshot of my trade.
AC.
But this GBP USD already hit the TP already. So that's why I don't want to look at it anymore. Yeah, it has hit my TP of 40 pips. This should have been great for this morning. Wow. It's all good.
It's all good. It's all good.
Yeah. So okay, hope you guys have a nice day. Yeah, what you guys will do, please, on your charts, just go and identify your uptrends or downtrends and send to you.
Okay.
Understand? Uptrends or downtrends, send to the group. Try and please tomorrow we'll look at it. So that's what we'll look at tomorrow. Before we start, we'll continue on trends. We still have one more thing to look at on trend. I need to teach you how to draw your trend line.
All right.
Yeah. Perhaps trend line is like you have to draw your trend line similar to how you draw your support and resistance. But look, that trend line is drawn slanted. You have to draw your trend line slant way. You understand? It serves similar purpose. It serves the same purpose with support and resistance, but it's drawn slanted. So I have to teach you how to draw your trend line tomorrow. That'll be the final thing on trends. Understand? But firstly, I need to know if you guys know how to identify your trends, so please. That's what you do for me today. Try, just identify your trends on any currency pair of your choice. Then send it to me. Send it to the group. We'll look at it together too. Hope we're all good. There's nothing bothering, no question concerning Forex. Mr. Daffy, are we good? So I'll see you guys. But by now, you guys should be analyzing your charts. We just need to take this stuff. Try as much as possible to analyze and still practice on your. You can still take the trades on your demo if you don't forget. For now, take the trades on your demo. I'll tell you when it's time to start taking on your life on your own. You understand? When it's time to take trades on your own, except I give you signal, you can trade on your life.
Okay.
Understand? But for now, still practice with what I've been teaching you on your demo so far. So I'll see you guys tomorrow, same time, 12 p.m. Have a nice day.